Exchange-traded funds, or ETFs, have become one of the most transformative tools for new investors, not because they are flashy or promise overnight riches, but because they quietly solve one of the biggest challenges beginners face: how to diversify without drowning in complexity. When you first approach the world of investing, you are often met with a confusing array of choices: individual stocks, bonds, mutual funds, real estate, cryptocurrencies, and the pressure to choose correctly can feel overwhelming. But ETFs offer something refreshingly simple: a way to own a broad basket of investments in a single purchase, providing instant diversification without demanding expertise in every asset you hold. For many beginners, ETFs feel like a breath of fresh air in a crowded room. To understand why ETFs are so powerful, imagine walking into a supermarket. You could buy each ingredient separately: flour, sugar, spices, vegetables, grains, or you could pick up a prepared basket where someone has already chosen the essentials for you. ETFs work exactly like those baskets. Instead of buying individual companies one by one, an ETF bundles many of them together into a single product. This alone makes ETFs a lifeline for beginners, because choosing individual stocks requires skill, research, discipline, and emotional resilience. One wrong choice can cause meaningful damage. But in an ETF, the failure of one stock has far less impact because it is surrounded by dozens, hundreds, or even thousands of others. It is the financial equivalent of spreading your weight across a wide bridge instead of balancing on a tightrope. Another reason ETFs are so beginner-friendly is the way they trade. Unlike mutual funds, which price only once per day, ETFs trade throughout market hours, just like regular stocks. This gives investors flexibility; they can buy or sell whenever the market is open. Yet, despite this flexibility, ETFs still maintain the long-term focus that helps investors avoid emotional decision-making. They invite you to think in terms of decades, not days. They ask you to believe in the overall growth of markets, not in your ability to predict every twist and turn. What truly differentiates ETFs from other investment vehicles is their structure. Most ETFs are passively managed, meaning they simply track an index such as the S&P 500, which represents 500 of the largest companies in the United States. A passive ETF does not try to beat the market. It simply mirrors it. And because there is no army of analysts picking stocks behind the scenes, passive ETFs tend to be far cheaper than mutual funds or actively managed portfolios. Lower costs mean more of your money works for you, compounding quietly year after year. For a beginner, this cost efficiency can be the difference between a comfortable financial future and a disappointing one. But not all ETFs are created equal. Understanding the types of ETFs is a crucial part of understanding how to use them wisely. Broad market ETFs give you exposure to entire economies. These include total market ETFs, S&P 500 ETFs, and global market ETFs. Sector ETFs focus on specific industries such as technology, healthcare, or energy. Bond ETFs provide stability and income, often acting as the calming force in a portfolio. There are also international ETFs, dividend ETFs, and even thematic ETFs that follow trends like clean energy, robotics, or emerging markets. The beauty of ETFs is that they allow you to build a fully diversified portfolio using just a handful of funds. Instead of owning 50 stocks, you might own 3 ETFs that together cover thousands of companies across the world. When beginners first encounter ETFs, they often ask, why not just buy stocks directly? The answer lies in probability and emotional resilience. Most individuals, even professionals, struggle to outperform diversify-rich index ETFs. Stock picking is exciting, sometimes seductive, but it also invites mistakes rooted in emotion. Fear of missing out, overconfidence, impatience, or panic. ETFs reduce these vulnerabilities by removing the burden of constant decision-making. With an ETF, you don't have to predict which company will succeed. You only need to believe that markets grow over time. Historically, they have. And that simple truth becomes a powerful foundation for long-term investing. Another advantage of ETFs is transparency. Most ETFs disclose their holdings daily, meaning you always know exactly what you own. There is no mystery, no secret management decisions happening behind closed doors. This clarity builds trust, something that beginners desperately need in the early stages of their investing journey. It gives you confidence to stay invested during turbulent times because you understand what your money is doing and why. Yet perhaps the greatest gift ETFs offer is psychological comfort. Investing can feel intimidating, especially when you're confronted with volatility for the first time. But when your money is diversified across hundreds of companies, the emotional impact of short-term swings becomes gentler. You stop feeling like you're gambling on a single outcome. Instead, you begin to feel like you're participating in the growth of the entire economy. That shift in mindset from uncertainty to ownership, from speculation to partnership, is one of the quiet transformations that helps beginners evolve into long-term investors. Still, ETFs are not perfect. Understanding their limitations is part of becoming a thoughtful investor. Some ETFs are excessively narrow, tracking tiny corners of the market that behave like speculative bets. Others carry high fees despite offering little value. There are leveraged ETFs that amplify movements. These can explode upward but collapse just as quickly, making them unsuitable for most beginners. And then there are thematic ETFs that promise exposure to futuristic trends but may lack long-term durability. The lesson is simple. Stick to broad, low-cost ETFs at the beginning. They offer the core strength your portfolio needs. Speculative ETFs can come later, if ever, after you've built a solid foundation. One of the most empowering aspects of ETFs is how easily they allow you to create a diversified investment plan. With just a few funds, you can achieve exposure to domestic stocks, international markets, and bonds. A classic example is the 3-fund portfolio, a total U.S. stock ETF, a total international stock ETF, and a total bond ETF. With these 3 pieces, you hold thousands of companies, hundreds of bonds, and a balanced mix of global economic forces. It's simple, elegant, and profoundly effective. And for beginners overwhelmed by choice, it feels like a lifeline, a way to start investing without feeling lost. What makes ETFs especially powerful is the way they pair with consistent contributions. When you invest a fixed amount every month, ETFs allow you to automatically buy small pieces of countless companies. Some months you buy at lower prices, some months at higher ones, but over time your average cost evens out. This approach, known as dollar cost averaging, helps remove emotion from the process. Instead of waiting for the perfect moment to invest, you invest consistently and let time do the heavy lifting. And as years pass, something remarkable begins to happen. Your ETF shares grow quietly, almost invisibly. Dividends reinvest, markets recover from downturns, and your holdings compound like a tree growing ring by ring. It is slow magic, the kind you barely notice until you suddenly look back and realize how far you've traveled. ETFs are not exciting in the short run, but they are profoundly rewarding in the long run. They offer a path of steady accumulation, a way to build wealth not through brilliance or luck, but through patience, discipline, and trust in the long arc of economic growth. As we approach the final arc of this exploration, it becomes clear that ETFs are more than a financial tool. They are a philosophy of simplicity, of humility, of long-term thinking. They remind you that you don't need to predict the future to benefit from it. You don't need to outsmart the market to participate in its rise. You don't need to chase trends to build wealth. You simply need to commit, stay consistent, and allow the quiet power of diversification to work on your behalf. And as your understanding deepens, you begin to see that this journey of learning ETFs was never about choosing the perfect product, but about learn to trust the quiet strength of diversification, the steady rhythm of long-term investing, and the calming truth that you don't need to predict every market movement to build a future worth striving for. Because the real gift of ETFs is not merely financial, it is emotional. They free you from the exhausting burden of constant decision-making, allowing you instead to build a portfolio that grows patiently alongside you, without demanding more than you can realistically give. As we move deeper into the second half of the journey, it's important to recognize that the ease of ETFs does not mean they are simplistic. Their true power lies in how elegantly they blend complexity into a single, accessible package. When you buy an ETF, you are buying the expertise of index construction, the discipline of market-weighted allocation, and the historical resilience of diversification, all wrapped into one product. This gives beginners a profound advantage. You can participate in broad market growth without having to dissect every industry, analyze every company, or anticipate every economic shift. It is investing with humility, with the quiet confidence that long-term progress matters more than short-term precision. As your understanding evolves, you start to appreciate how ETFs bring emotional balance to your investing life. When markets fall sharply and individual stocks tumble unpredictably, broad ETFs soften the blow. Instead of feeling the sting of a single underperforming company, you experience the gentler movement of a diversified collection. This reduces the emotional volatility that leads so many beginners to panic sell at the worst possible moment. The smoother your emotional experience, the longer you stay invested. And the longer you stay invested, the more the power of compounding begins to work in your favor. But just as important as staying invested is learning how to maintain your ETF portfolio. Rebalancing becomes a quiet act of stewardship, periodically adjusting your portfolio back to its intended proportions. When your stock ETFs rise too aggressively, trimming them helps you lock in gains. When your bond ETFs drift lower, adding to them restores stability. This subtle discipline keeps your risk level aligned with your goals, preventing your portfolio from drifting into a state that feels too aggressive or too conservative. Rebalancing is one of those habits that doesn't feel dramatic, yet over decades it becomes a cornerstone of sustainable wealth. Another powerful lesson that emerges from long-term ETF investing is the value of consistency. When you pair ETFs with regular automated contributions, you create a system that works even when you're not paying attention. Some months you buy at higher prices, some months at lower ones, but every month you build. This rhythm transforms investing from an emotional decision into a quiet ritual, one that steadily reshapes your financial future. The beauty of ETFs is that they don't require you to be brilliant. They require you to be consistent. And consistency is a trait anyone can cultivate with practice and intention. Over time, you begin to notice something subtle. Your relationship with money itself starts to shift. Instead of chasing the thrill of picking winners, you feel grounded in the reliability of your plan. Instead of judging your progress by short-term performance, you start to see investing as a long narrative, one with chapters, seasons, setbacks, and recoveries. This mental shift is one of the most profound transformations an investor can experience. And ETFs, with their simplicity and breadth, act as the gentle mentor guiding you into this more mature way of thinking. Eventually, you start to see that ETFs offer more than convenience. They offer freedom. Freedom from complexity, freedom from noise, freedom from the relentless pressure to outsmart the market. They allow you to build a portfolio that mirrors the global economy itself, a living, breathing network of companies, industries, and markets evolving over time. With just a few carefully chosen ETFs, you can participate in that evolution without spending your life trying to predict it. That freedom, that peace, is worth more than any short-term gain. And as we bring this lesson to its final arc, remember that ETFs succeed because they align with how real people actually live. We have jobs, families, responsibilities, dreams, and limited time. ETFs recognize this reality and give us a tool that honors both our limitations and our aspirations. They take the vast, chaotic landscape of global finance and condense it into something usable, understandable, and sustainable. That is why so many long-term investors, not just beginners, rely on them as the foundation of their portfolios. So if this exploration of ETFs has given you clarity, if it has helped you see that diversification doesn't need to be complicated and investing doesn't need to be stressful, I warmly invite you to share your reflections. Your thoughts help me understand which lessons resonate most deeply with you. And if you'd like to continue learning with me, step by step, lesson by lesson, feel free to subscribe or follow. Week after week, we'll keep sitting together, unfolding the quiet wisdom that helps ordinary investors build extraordinary resilience.